Hi, welcome to this episode of Millennial Pocket. Today we're going to be looking at the history of GameStop. GameStop is an American video game, consumer electronics and gaming merchandise retailer. Its annual revenue for 2019 was $6.4 billion, a 21.96% decline from 2018. Most of its revenue comes from trading video game software. In fact, GameStop doesn't make much money from selling new games. The real moneymaker for the company is used games. Sales of pre-owned and value video game products sport a gross margin roughly twice that of sales of new video games. But why has GameStop been struggling? Let's take a look. The company was founded in 1984 in Dallas, Texas, by former Harvard Business School classmates James McCurry and Gary Kusin. At that time, the company was called Babbage's, and it started as a small educational software retailer, but quickly began to focus on video game sales. By 1993, more than 60% of its revenue came from video game software, and the company had 300 stores across the country. Most of its early success was due to the fact that video games were not easy to find. In 1994, Babbage's merged with Software Etc., a Minnesota-based retailer that specialized in personal computing software, to create NeoStar Retail Group. In 1999, the company was sold to Barnes & Noble for $215 million. With the purchase, Barnes & Noble gained control of 495 stores under the Babbage's and Software Etc. names. The company was renamed GameStop, and a new website was launched to sell video games and personal computer software online. In 2000, GameStop released a buy-sell-trade program, which allowed customers to trade in old video games to buy new ones. That was crucial for the company, because selling used video game software has been its biggest source of income so far. In February 2002, Barnes & Noble took GameStop public, with an initial public offering on the New York Stock Exchange. GameStop was listed under the ticker symbol GME, and its common stock was priced at $18 per share. Barnes & Noble retained control over GameStop until October 2004, when they announced the spin-off by distributing its 59% stake in GameStop to stakeholders of Barnes & Noble, making it an independent company. In 2005, GameStop agreed to buy rival Electronics Boutique Holdings for about $1.4 billion, creating a chain of about 3,800 stores worldwide. The deal combined two companies of similar size and sales. GameStop operated about 1,800 stores and had revenue of $1.84 billion in 2004. On the other hand, Electronics Boutique ran about 2,000 stores and had sales of $1.99 billion for the same fiscal year. The goal was to expand the business worldwide, and soon after the acquisition, GameStop shares rose by $2.15 to $23.76 on the New York Stock Exchange. 2 years later, in 2007, GameStop acquired Rhino Video Games from Blockbuster for an undisclosed amount. Rhino Video Games operated 70 video game stores throughout the southeastern United States. In 2008, the company announced the acquisition of French retailer Micromania for $700 million. GameStop, which had previously owned no stores in France, picked up all 332 Micromania stores, increasing its European store count to 1,077. The next year, it also acquired a majority stake in Jolt Online Gaming, an Irish company that developed and published license-based free-to-play titles and also operated as a browser-based game studio. GameStop believed it could take advantage of Jolt's experience as a publisher, developer and aggregator to create online games that fulfilled needs that major publishers weren't addressing. It didn't go as they expected. In fact, Jolt closed in 2012. In 2011, the company made another acquisition. GameStop agreed to buy Spawn Labs, a developer of technology that allowed users to play video games that were run remotely on machines in data centers rather than their personal computer or console. Unfortunately, GameStop had to close Spawn Labs in 2014. In 2013, GameStop launched its new technology brand segment when it acquired both Simply Mac, the largest reseller of Apple products, and Spring Mobile, the AT&T authorized retailer of wireless services. The company wanted to boast the title of largest video game retailer in the world, as well as the largest AT&T authorized retailer and largest Apple authorized specialist in the United States. The goal this time was to diversify into new businesses and be less dependent on the video game market. Eventually, also this plan failed, and GameStop decided to sell both companies in 2019. 2013 was a big year for video game consoles. PS4 and Xbox One were a hit, and GameStop video game hardware sales increased by almost 30% compared to the previous fiscal year. In 2014, GameStop started to sell collectibles including figures, clothing, board games and other non-game merchandise. Collectibles also provided opportunities for GameStop to host launch events and pique interest for specific brands, even without a new game or system release. In 2017, GameStop reported a 16.4% drop in sales for the 2016 holiday season. This happened because online services like Xbox, PlayStation and Nintendo started to offer downloadable digital video games. Since its business was long rooted in new and pre-owned software, GameStop began to feel the effects of the changing market. On the other hand, in 2019, the collectible sales increased by almost 900% compared to 2013. In 2018, GameStop had meetings with Sycamore Partners, a private equity firm in New York, because the company was looking for a possible buyer. However, the next year, GameStop announced that it stopped looking for a buyer due to a lack of available financing. Shares dropped 27% to a 14-year low immediately following this announcement. Over the last years, internet and tech companies have made big moves into the video game industry. In 2019, Google launched its own video game subscription service, Stadia, offering 22 games in 14 different countries. Also, Apple launched its gaming subscription service that year, called Apple Arcade, available for all Apple devices. In May 2020, another giant tech made the big move. Amazon dived deeper into video games by launching its gaming service Crucible. Nowadays, video gamers don't have to rely anymore on high-end console and PC games. With all these new services, they just need a web browser. All these new changes have been affecting GameStop's games and hardware sales. Most recently in January 2021, a short squeeze resulted in a 1,500% increase in GameStop stock price over the course of 2 weeks, reaching an all-time high of $347 on January 28, 2021. Part of this effect was attributed to the Reddit community Wall Street Bets, and a subsequent jump was triggered after Elon Musk tweeted "GameStonk" in reference to the Reddit community. What do you think about the company? Is it going out of business? Or is there still a chance to survive changes in the video game market? Please let me know in the comments section below. Leave a like if you got some value from this video and subscribe to the channel if you want to see more videos like this. Feel free to follow us on Instagram. We post every day there. I hope you really enjoyed this video. Thanks for watching, guys. Until next time.